I am Devarsh and I am joined by my colleague Subash. We are going to discuss the midweek market outlook, and then I'll come in and share about our research recommendation issued this week and the track record of the past recommendations. So without further ado, over to you, Subash. Please share the view from technicals.
Yeah, thank you, Devarsh bhai, and good evening to everyone. So I will cover the technical view of the markets from a midweek perspective. So the markets have been correcting sharply for the last two sessions. So as you can see, it has broken the previous swing low of 19,223 and closed well below that. This indicates that the short-term trend is now firmly down. And if we look at the technical indicators, Nifty has now firmly closed below both the 20-day and the 50-day simple moving average. On the weekly chart, it has also closed well below the 20-week SMA. And the 14-week RSI is also in decline mode, and at 49.46 is not yet oversold, which implies that there is potential for more downsides in the coming sessions. So our downside targets are at 18,881, which is the previous intermediate high over here. As you can see my mouse cursor, I've shown where it is. So that would be our first target, 18,881. And the next target would be at 18,830, which is the 200-day EMA. So we expect the Nifty to come down to these levels in the coming sessions. Any pullback rallies could find resistance at 19,347 to 19,480. Most of the sectors too are showing weakness. If we look at the Bank Nifty, today it has closed below the 200-day EMA, which is a weak sign. Fin Nifty has also similarly closed below the 200-day EMA. And many sectors like energy, infra, IT, media, and pharma have broken their recent swing lows. So if you see here, I'll just show you. If you look at the energy index, it has closed below this previous swing low. Similarly, pharma index has also broken down from the range. Then IT index remains in a downtrend. It is making lower tops and lower bottoms for the last 2 weeks. Media is also broken down. And if you look at the broad market indices like mid cap and small cap, they too have broken down from their recent ranges. If you look at the mid cap index, it has also closed below the 20-day and 50-day SMA. And the 14-week RSI too is declining sharply, which indicates that momentum is declining rapidly. Similarly, the small cap index also has broken down, so there could be more correction in the coming days. So overall, we remain bearish on the markets, and any pullback rallies are likely to be short-lived. So in terms of strategy, we recommend staying on the sidelines till we see signs of sustainable strength. That's all from my side. Now over to Devarsh bhai.
Okay, thank you, Subash. Is my screen visible?
Yes, it is visible.
Okay. So since beginning of May, we have been aggressively giving wrong recommendations on MTF side. We have recently booked some. This week, we haven't issued any new MTF recommendations. Similarly, we have been able to book about 107 fundamental recommendation, and recently we booked Ashoka Buildcon. A couple of new 2 recommendations on the longer term horizon, Manyavar and Nutco, have been issued. Apart from that, we have issued about 18 DIY SIP stocks on July 21 for a SIP every week for a longer term. Today, we have issued a short report on index derivative side. Basically, we are asking investors to look at shorting mid cap Nifty November futures between 8770 and 8990 with a stop loss of 9060, and we expect targets of 8350 and 8200. So people who trade on derivatives or who have a long derivatives or who have a large mid cap small cap portfolio, this is a good hedge. This way we can protect our investments, longer term investments, while markets are turning little bearish. So as you can see from mid cap Nifty, it has recently come below the 50-day EMA. The RSI and MACD are looking bearish, and recently we have seen a breakdown. Number of stocks also in S&P 500 has turned lower. So this is the one more indicator which we keep tracking, and we were able to see that the breadth is deteriorating, and this is also one more evidence. So all these are suggesting that one can remain short around this level and expect the downside targets of 8345 in mid cap Nifty. 1060 should be the target. Now for longer term investors, one can look at Hutco between 77 and 68 for targets of 86 and 91. Hutco is a government owned company, we know, and it has a good corpus over the urban infrastructure side. We believe that the company can perform because of the incremental growth in the credit side without any large slippages. Similarly, Manyavar or the Vedant Fashion, it's one of the exclusive Indian wedding and celebration player. According to one estimates, more than 1 lakh crore of spending is expected in weddings over the next medium term, and that's why we have picked this company. It has strong design capability, and it has a good back-end supply chains to replenish its stores. So around 1300 and average it around 1160 for a targets of 1445 and 1555. So these are the two new large fundamental ideas which we have issued. So overall, we are cautious on short term, mid cap Nifty, and Nifty looks little weak. Bank Nifty is also particularly weak. So we have asked investors to conserve capital right now. If you have any leverage position on long side in derivatives, or you have MTF position, it is advisable to create about 10 to 15% cash, so that if there is any volatility and if you have to pay for the mark to market margins, you are comfortable with your overall position. So that's what we wanted to share quickly. Now, if you have any questions, depending upon the screen you are using, you can press the question mark symbol on your screen and put a question, and I will try to answer as many as possible. Meanwhile, while the question queue is assembling, Subash, if we were to look at the different sectors, as you pointed out, how looking at the Bank Nifty chart, where is it close, and where do you see the levels, next levels for Bank Nifty index?
Yeah, Bank Nifty is right now at 42,854. So the next support is at roughly 41,900, which is the previous intermediate highs. That would be the immediate downside target. So that is around 800, 900 points away.
Okay.
From current level.
All right. So about 800 to 900 point fall is possible in Bank Nifty. Okay. So my questions are why market is going down. So there are several reasons why market correct. First trigger came from the geopolitical events. The Middle East, the skirmish between Israel and Hamas, that was the first trigger. That led to, and that coupled with the higher treasury yields and higher interest rates, that is putting pressure on corporate profitability and many who have borrowed against US Treasury. So many foreign investors, many local investors do borrow from abroad and put money into equities, many multi-asset fund managers, and they are pinching the 5% higher interest rate is putting pressure. Those people who have leveraged against US Treasury may have to pay a lot of mark-to-market losses. So that's the first reason. Second is result season is going on, and many people choose to reduce exposure before the result season. once the results are out, and if companies perform as per the market expectation better, then investors can come into those stocks. So keep monitoring the quarterly results. That will give us the good indication where markets are headed. Apart from that, many people are also worried about the state elections which are going to happen, and depending upon the outcome, there could be political instability also. That is the fear in somebody's mind, and that's why all these reasons combined led to some kind of a liquidation in the market. And then beyond the first fall, the technical reasons take over. As people who have created short-term trading positions, their stop losses are getting triggered and they are exiting the market, and the supply of stocks is more than the demand right now. So that fuels the downturn or a down cycle or a correction in the market. So we are expecting that kind of correction to play its way through. Over a longer term, we are continue to remain bullish, and we think that those people who are sitting on cash, once the market stabilize after a correction and the levels around 18,800 or so, it will be a great opportunity to accumulate stocks. Right. So yes, what are the ways to hedge? One is to short futures and keep a stop loss. Second is to prepare sell call options of the stocks you own. Third way is to buy put option of the stocks you own, or if you want to hedge overall portfolio, you can look at buying put option in the index also. So that may not be one-to-one hedge, but if market continue to go down, then obviously that option premium may rise, and that will help you offset some of the losses which you incur in your longer term portfolio. So these are the way you can hedge your portfolio during the downturn. So we have issued a short recommendation on mid-cap Nifty. It is available on our website in the derivative segment. If you are connected with any of our branches, you can connect with the branch relationship manager, and they'll be more than happy to pass on the report to you. For longer term, those people who are doing SIP, they should continue to do SIP. The logic of SIP is that when market corrects, you get more units, or if you are doing a direct SIP, when market corrects or the prices come down, you get more shares. So there is no problem with that. You should continue with your longer term investment, your SIPs. This is a short term, medium term correction which we are trying to highlight, and that has been underway since last couple of sessions. So it is for the short-term traders, where those people who are leveraged, those people who are trading large positions, need to be cautious on the market. Mr. Praveen, we have issued a recommendation on mid-cap. The report is there on the website. Apart from the Nifty and Bank Nifty targets Subash just mentioned, we also have covered such levels in our daily report, which is there in the website. Apart from that, we come out with the weekly, fortnightly webinar where we have given these recommendations to remain cautious. Last Saturday, I did a webinar and asked investors to remain cautious on the market. And similarly, this week also we will be repeating that message. So those people who want to put lump sum money, I think it is advisable to stagger your investment. Don't put it at everything at a one go. Gradually, over the next couple of weeks, put in money. Those people who those people who are doing SIP or a DIY SIP in a stocks, there should not be any worry. You should continue with your longer term investments. It depends upon where you invest. If you are investing in stocks where earnings are going to go up, then lower prices is an opportunity. If companies where the earnings are behind and earning peak is already done, then those stocks may not perform in future. So wait for the quarterly results, and when you are sure that the results are good, future growth is possible, valuation is not very stretched, those are the areas where you should invest for the longer term. We'll come out with the recommendations on the derivative side, on long-term investment ideas, on MTF and e-margin also. I advise everybody to follow our research, and you will be able to navigate these difficult times skillfully. Thank you all for joining. Subash, thank you. Let's close this webinar. Thank you all for joining.